Hello everybody, and welcome to our webinar today. My name's Colin Reardon. I'm the Secretary General of the Association of Commonwealth Universities, and it's a great pleasure to be able to host today's webinar. We're holding it to launch our new report, which is actually going to be published in a few weeks' time, but we're going to get a not exactly sneak, a full preview of some of the key findings today, and the report is entitled Alternative Higher Education Financing, Global Trends and Commonwealth Policy Insights. And I'll come on to a little bit more detail about that in a moment. But before then, some housekeeping. You'll have probably seen from your screen that the webinar is being recorded, and we are intending to circulate the recording afterwards to all of the registered participants. Apart from the speakers, everybody will be on mute during the session, and we will certainly keep to time because I know you're all very busy people joining from across the Commonwealth and beyond and in a whole range of time zones. We do want to allow space for discussion and audience questions towards the close, but use the Q&A facility throughout, and we may not be able to answer all questions in the session live at the end, but any that we don't answer, we will follow up with subsequently. So just a word or two about the background. We have this report has come about really as a result of a working group that we've had on university financing here at the ACU. We're all aware that universities globally are operating in a very increasingly difficult financial environment, and that counts for almost every single member university of our around 400 members right across the Commonwealth in 40 countries that I meet. Whenever I meet vice chancellors, presidents, university leaders from across the Commonwealth, we are all suffering, or as we're suffering, maybe the wrong word, but certainly experiencing issues around fees and funding. But not only that, the demands on universities are simultaneously increasing. We're asked to expand access and participation, to drive innovation and research impact, to respond to labour market and skills needs, to contribute to economic growth and productivity, as well as supplying support for climate resilience and for public health, and to strengthen social cohesion and provide opportunity. And, you know, in addition to that, certainly here in the UK, I'm aware that we're being asked to do contradictory things at the same time, to be more competitive, but also more collaborative, to be more global and yet more local, more efficient and ruthlessly efficient, and more personalized, more market driven, but more personably accountable. So we're caught in a tug of war here. And, you know, we do face some significant headwinds, in particular on this topic: declining or stagnant per student public funding, rising costs. We're all experiencing a rate of inflation which is often greater in higher education, whether that's for operating costs or infrastructure, than in the general economy. There's huge pressure in terms of digital transformation and AI. There are demographic shifts and changing student expectations that we have to deal with, as well as growing competition with other sectors and other areas of government expenditure for resources. Now, having said that, universities are increasingly recognised as a strategic part of the national infrastructure of their country, whether that's skills, innovation, research, or social mobility, which in itself is positive, but does create challenges for us to deal with. Now, why is the ACU dealing with this problem? Because I'm sure that university associations in all the countries of the Commonwealth are also having similar discussions. But given our network of 400 universities across 40 countries, we do have a unique position here. We can compare institutions operating in very different contexts, but often facing remarkably similar pressures. And it does allow us to share good practice, to look for ideas that we can share more widely and learn from one another, perhaps in very innovative ways that haven't otherwise been broached. Because across the Commonwealth, we see a whole range of systems, some of them highly publicly funded, others more self-financing or entrepreneurial, others very much supported by donors with emerging philanthropy models, systems that are much more dependent on public-private partnerships or more dependent on student contributions. So the real value then of the Commonwealth is that it's it's a relatively safe space where we can discuss things as friends, and we can learn from one another comparatively, share practical experience, and that is the key really here. And we can help to understand what transfers across systems and what is very context specific to particular countries or particular systems. And you do have to avoid a one-size-fits-all system or try and make the claim that if it works in one country, it's going to work in another. So the report that we are talking about today builds on our broader policy work around higher education, and it stems from a higher education task force made up of 20 vice-chancellors from across the Commonwealth that we set up 2 years ago. It was set up as a task and finish group. It is now concluding its deliberations, and we're going to take the results of that to the heads of government meeting in Antigua and Barbuda next in November. So this is the tenor of the report is very much meant to be supportive, not just of our universities, but it fulfills our function as the voice of higher education, the accredited voice of higher education for the Commonwealth. And our recommendations will be aimed at finance ministers, they'll be aimed at education ministers, and they'll be aimed at heads of government, and we put them in those classifications. And I do think it will get the attention of government, because the idea is that we're able to show examples of practical policy steps that can be taken. So I think this will be very helpful. And we specifically in the report examine emerging financial models globally as well as across the Commonwealth. So we haven't restricted it just to Commonwealth countries. We've been magpie-like about this. We've taken good examples wherever we can find them internationally. We're talking about what diversification of income type approaches are actually working, which policy environments enable success, what the challenges are in implementing, and what are the trade-offs, and the risks that could be associated with poorly designed diversification. And we will now, in a moment, hear a bit more detail about the report, but the strong messages emerging from this research are that governments do remain absolutely central. So that partnership is an absolutely key one, not only as funders, but also as enablers through tax incentives, through innovation frameworks, matched funding, regulatory flexibility, that's a key one as well, public-private partnership mechanisms, and support for lifelong learning and research commercialization. So I just want to start by, or sort of conclude my remarks by saying a big thank you to our speakers today, GMR, who will speak in a moment, who is one of my colleagues here in the ACU, Dr. John Machai, who's the CEO of the Higher Education Loans and Scholarship Board in Zambia, Cheryl Hamlin, former Vice President for University Relations of the University of Saskatchewan in Canada, and Professor Chaminda Rathnayake, Deputy Vice Chancellor and Director of Operations at NSBM Green University in Sri Lanka. So a big thank you to all of you for joining. We're very grateful and for sharing your thoughts with us today. So I'll move straight now to Dr. Giamar, our Research and Evaluation Officer, who I want to commend and thank for her really substantial work on this report. So I'll hand over now to Gia to take us through some of the key findings. Thanks, Gia.
Thank you, Colin. Hey everyone, my name is Jie. I'm the Research Evaluation Officer at the ACU, and today I'm going to talk about this desk research, alternative higher education financing. And so this desk research aims to establish a baseline understanding of alternative funding models adopted by universities, and then identify emerging trends and policy directions across Commonwealth countries. And finally, we wish to propose strategies for diversifying university revenue stream in Commonwealth nations by incorporating discussions emerging from these webinars and working group discussions as well. Next slide, please. So in order to achieve the above objectives, we incorporated four types of literature streams. The first one is academic literature, mainly from Education Resource Information Center, which is open access database. This means that any literature within the paywall is not included in this desk research. The second literature is international agency reports from UNESCO, OECD, World Bank. The third one is latest available national strategies, education plans across Commonwealth with a specific focus on higher education sections. This is also retrieved from the UNESCO higher education database as well. The fourth stream of literature is from the recent news articles from Times Higher Education, PIES, and the University World News. And lastly, but not least, that any references were identified during the desk race were also included in this desk research. So within this four stream literature, we developed two such strategies. One is the Boolean strain, which applies to the database such as ERIC, Education Resource Information Center, which support Boolean strain search, and any other like websites which doesn't support so, we use theme browsing to retrieve relevant documents. The third stage is screening, that we use Copilot to help us to screen the most relevant documents and literature, but also this is reviewed by the research as well. So after this, in total, over 150 documents from different literature streams were included in this study for further extraction and analysis. So we have our data, and we have all the data compiled in Excel, and we want to identify and locate the information we need. And we use the initial literature review. We pre-developed typologies and examples were alternative funding models. And we use Copilot to help us to locate the relevant information about alternative funding models. And this all the information will be collected and compiled in an Excel dataset, eventually including details such as countries, regions, funding models, summaries, and direct references from these documents and document titles for us to review later. And then each entry was reviewed by the research to assess the relevance and verify the accuracy as well. Next slide, please. So those pre-developed funding typologies and examples can be loosely categorized into three groups. The first group is funding from students, alumni, and donors, and the second group is funding from universities using their intellectual assets such as teaching and research, and as well as physical assets like leasing properties to generate income. The third one is more partnerships and consortia-oriented funding models, which includes public-private partnerships and regional multilateral consortia for resource pooling. We're also interested to exploring how policy-enabled financing and incentive mechanism interact with each of those funding models. Is it standalone one, or are they interact with each other very closely? Next slide, please. So what we found from all those data we collected, for the first group, students funding from students, alumni, and donors. So despite mixed results, the model of cost sharing through student contribution is it's prevalent and very common. It's very rare to see in these days. I mean, like all the higher education systems across the world, across the world charge some sort of fees, either tuition fees or other fees, to at least some students for some programs, let alone private higher education. It is very rare to find any higher education system provide like universally free higher education for these students. However, the evidence we found indicates that this approach raises concerns about access and fairness and student debt, and how we can balance different fee structures and student financing. It really depends how universities and countries take into account their own unique cases. The second model is philanthropy and alumni giving, and these models are still developing and not yet become widespread. Their adoption and prioritization vary across regions and countries. It is very popular and successful in North America, such as USA, but it is not prioritized by the universities in Europe, according to a recent European Association of Universities survey. So this is a very unbalanced picture, but we also saw emerging trend, which is developed in Southeast Asia, such as Malaysia. This kind of culturally rooted funding model can be shaped by policy, and they develop policy incentivized mechanisms to encourage higher education to establish endowment funds through tax incentives. So this model can demonstrate their potential for university to generate income. Third model is international donor funding, and it's not surprising we can see that these models remain very critical for low-income countries, including a lot of Commonwealth countries. But at the same time, that Commonwealth countries also realize that how fragile this funding model by over-reliance this single funding source. And for example, such as Eastern Caribbean states, they already mentioned in their policy documents to advocate a hybrid funding model by combining the donor funding with the public-private partnerships models. Next slide, please. The second group of the funding models will incorporate that the intellectual assets and physical assets the university using to generate income. The first one is the revenue generating education model, which means the university using teaching expertise that provide courses and corporate professional trainings, provide online, international, transnational education to non-traditional students to generate income. So what we found here under this model is short-term courses and corporate or professional training are widely used to diversify university income across different countries. For the international students recruitment and transnational education, they're pursued not only by high-income countries such as UK, US, Canada, Australia as traditional global centers for international education, but also by lower and upper middle income nations that are emerging as regional hubs, such as Malaysia, that are trying to attract international students in their region, and India trying to not only attract international students to their own countries, but also trying to select a top university in their countries to encourage them to build international branch campuses outside of the India as well. We also identify an emerging trend that is integrating online education with international education as well, such as Australia and the UK, and try to target more wider group of students. The mode of commercialization of research and intellectual property is often enabled by legal regulations, incentivize research participations, and the shared ownership of research revenue generations, and institutional infrastructure expansion, such as technology transfer offices. This model is more common in high-income countries, but kind of limited in low-income countries. Finally, for the physical assets, asset learning is very common across countries, regardless of development status, but financial instruments such as bonds, such advanced instruments are more limited to high-income contexts. Next slide, please. The third group of the funding models is partnerships, more partnerships and consulting oriented. I want to highlight here is what we found is really interesting about public-private partnerships. It's expanding and evolving. It's an evolving model. It's expanding beyond infrastructure projects such as student housing, campus facilities to include more strategic collaborations that integrate academic services, workforce development for regional industry, and applied research. For example, in Germany, there's an employer-backed up public-private partnerships to establish international student career services. And in Hungary, there's automotive industry collaborate with the universities. They direct finance faculty to produce workforce capabilities for their regional industry expansion. And there's also research and development lab or research R&D lab was embedded and developed within the university for firms to access the R&D expertise, but also for the university to generate income. So this evolution of PPPs presents a significant opportunity for government to align higher education financing with industry policy, skill strategies, and national development plans, and going beyond the infrastructure-oriented public-private partnerships. And we also see a growing government interest and commitment to PPPs, especially mentioning many Commonwealth countries' education strategies, either clearly framed as alternative financing strategies or combining with other strategies to generate additional income for universities. The last one, consortia, it operates at different levels. They can be at national level or sub-regional or regional level, but all of them highlighting the geographical proximity plays a key role in effective resource pooling. Next slide, please. So finally, I want to highlight the key message from this desk research to conclude this presentation. So diversification is a global trend, and both diversification roles cannot fully compensate for the sustained reductions in core public funding. That's why in this context, governments remain the key actors, both as co-funders and as enablers to enforce the mechanisms such as levies and incentivize mechanisms such as tax incentives, exemption, matched funding, innovation vouchers, or performance-based funding linked to industrial collaboration to foster and encourage public funding to higher education. So it's a public-enabled financing incentive mechanism is a catalyst for us to develop and implement alternative funding models. I'll stop here, and I hope I haven't occupied too much time, and welcome any questions afterwards. Thank you.
Thanks very much indeed, Gia. So we will now come to Professor Cheryl Hamlin, who is from the University of Saskatchewan, and will present institutional reflections from her institution on building financial resilience through a range of diversified approaches. Cheryl, over to you.
Thank you so much, Professor Riordan. I'm very happy to be here today with you to talk a little bit about how to relieve financial pressure and support financial resilience through philanthropy. As you know, I'm from Canada. We have 97 universities in Canada, many of them very advanced in the fundraising and philanthropic marketplace. with campaigns or fundraising operations anywhere from, $500,000 to $1 million, all the way up to a University of Toronto type model that is running a $4 billion campaign. So, quite advanced. So I'll just jump into the slides now. Thank you. Next slide. The case study that I wanted to present is with the University of Saskatchewan. We are a province of 1 million people, so not large. And we set out to do a 10-year campaign, the largest campaign in Saskatchewan history of any kind of not-for-profit organization. And it was to help solve the world's greatest challenges. So we had called it the Be What the World Needs campaign. Not that we were what the world needs, but that we wanted to be what they needed and filled those gaps. So we set out to raise $500 million. Next slide. Here was the massive challenge that we faced. We were 7 years into the campaign. I joined at the end of 7 years, and unfortunately, we were only halfway to the goal, 51% to the goal, and had 3 years left to go. We didn't have a lead gift for the campaign, and our largest prior campaign year in that 7 years was 51 million. So we realized that we had to nearly double it in the next 3 years to make our goal. Next slide, please. We ended up 3 years later, not more than doubling where we started at $572 million raised. And you can see on the slide the various stats, 101,000 gifts from people, alumni and individuals and corporations in 44 different countries, 30,000 plus gifts to enhance the student experience, and so forth. Next slide. And how did we do it? How did we do this big turnaround? So first and foremost, we really worked hard, and I would encourage anyone on this call to really start building a culture of philanthropy and sustainability. We realigned our campaign systems and our CRM, or our database capabilities, to enable us to do a campaign of this size. We built very strong business and corporate partnerships, which Dr. Ma was speaking about earlier, very, very important for our success. We diversified our pool of donors and our types of gifts sought. Dr. Ma also talked about some commercialization and business corporate partnerships. We saw a lot of diversification throughout the campaign. And we did very robust marketing and communications, of course, to ensure that the community, the province, and the international community, national and international community, knew about this campaign and what we were doing. What we called reinvigorated our people on the ground and further resourced our team. You can't raise money unless you have the resources to do that. And we really made the case internally, even though as Dr. Riordan had said, funding is tight, funding is much more difficult to come by, but we were able to convince leadership, or our leadership, that building out our team to support philanthropic endeavors in the campaign was a good return on investment. We really doubled down on our stewardship. So that's the whole creating of relationships and maintaining those relationships in order to not only support this campaign, but to support in any fundraising and campaigns into the future. Next slide, please. So for any sustainable philanthropic models, whether you're in a campaign or whether you're just doing a fundraising campaign year over year, you really need to have 5 conditions present. So you need trust, to build your donor confidence, stability, to enable long-term investment. Many of the donors that we work with have been invested in the university for decades and decades. Transparency, really have to make sure that your reputation is very, very transparent, is very positive, and that you really have open books for people to look at. Again, the capacity, as I spoke about, in terms of the human resources to support growth, and then you really have to demonstrate impact, demonstrate value for what people are giving for, not only what they're giving for, but what the university is doing in general. Next slide. Thank you. The most sustainable fundraising models are typically those that combine visionary leadership, long-term institutional credibility, and rigorous governance. Your donors are really going to look at the governance of your organization. As I said, compelling societal impact, philanthropy in Canada and certainly in the US and elsewhere is really seen as a driver of research, teaching, learning, and social impact. Your donor relationships need to be very authentic, so that you're aligning your institutional mission with your donor values and vice versa. And this is really important. A view that philanthropy and partnerships are supportive and helpful, not limiting, overreaching, or untoward. There is a even in Canada and in the US to a degree, and I'm sure in other parts of the Commonwealth, there's a bit of a idea that fundraising or taking money from corporations, individuals, foundations is, maybe we are challenging our values, or we're not living our academic freedom, but really turning that around and looking at why a culture of philanthropy is so important, and how you can accept donations and have them be very arm's length and appropriate is very important. Need a very coordinated prospect management and multi-college institute ask a strategy, and again, exceptional stewardship. Next slide, please. Just wanted to talk for a few minutes about business engagement and key strategic partnership development. So when you're looking at about 30%, 35% of the campaign that I've just been talking about was funded through corporate and business partnerships. And so what we looked for were long-term mission-aligned relationships, corporations and businesses that had academic and research alignment, ones that were able to integrate their funding with intellectual, reputational, and network capital, those that were big on impact measurement. A good example of a business or corporate partnership that we developed was with a company that is a global provider of crop inputs and services. It's a company called Nutrien, and very, very large company with a market capitalization of $46 billion, headquartered in Saskatchewan, but globally. And we were able to create a $15 million philanthropic partnership with them. And it funded everything from research to student support to programming, but also had a innovation and commercialization aspect that will, pay dividends into the future. So a very multi-pronged, multifaceted partnership that took about 2 years to build, but was incredibly productive and will be for many years to come. Next slide, please. Strong strategic fundraising partnerships have visionary proposals. You have institutional excellence in the area, measurable returns, and as I mentioned before, very close working relationships with your donors. Really need to provide feedback channels and make sure that the donors feel engaged, but as I mentioned, not overreach. Next slide, please. A little bit on how to work with your internal partners when you are building these sustainable philanthropic and strong fundraising partnerships. So you really have to involve your internal stakeholders in your philanthropic priority setting, your prospect alignment, setting metrics for your deans, your institute directors, building out your case documents and your marketing materials, and continue training both cross-functional teams and training your academic leaders, and continue with the robust impact reporting and recognition systems to encourage additional and future partnership cultivation. Next slide. And then just a few words on the policy conditions integral to building sustainable philanthropic models. In Canada, we're very lucky. We do have excellent charitable tax incentives. We have quite stable not-for-profit regulation. So, philanthropic friendly estate laws, matching grant programs, the transparency standards that build public trust, and relatively reasonable reporting requirements. So generally, countries that will have strong philanthropic ecosystems have good regulatory accountability, donor incentives, and also institutional autonomy. At the University of Saskatchewan, we enjoyed a very close relationship with our government partners who understood philanthropy and believed that philanthropy was a real driver to marry up with government funding. There was no sense of clawbacks. The better we did in philanthropy, the government wasn't looking to claw back funds. They saw it as amplification, which was wonderful. And last slide. Thank you so much.
Well, thank you very much, Cheryl. That was very inspiring, fabulous story there of success, and congratulations on that. I know how, as a former university president myself, that this is a big process, and that's an amazing achievement. Thanks very much. So I'm delighted now to be able to introduce Professor Chaminda Rathnayake, who's the Deputy Vice Chancellor and Director of Operations at NSBM Green University, Sri Lanka. And Chaminda's going to talk about the university's self-financing model, including institutional growth, TNE, and various other matters. So I'll hand straight over to you now. Thank you.
Thank you very much, Professor. The story that I'm going to share is from NSBM here in Sri Lanka. It's a story about how we solved an higher education issue in the country, at the same time how we develop as a self-finance model in higher education. But to start with, I need to show you the landscape of higher education in Sri Lanka as we move into the next slide, please. Sri Lankan higher education sector, we have this, I'll put some statistics. In 2025, we had around 281,000 students who sat for A-levels, and 176,000 odd who were eligible to get into the universities, that is, they are qualified, but only 42,000 odd who are getting entrance to the national universities, which are free of charge. So as you can see, that gives a great market, a bigger number of students who need to go for other options. Certain options, of course, to go to non-state universities, which are fee-levying higher education institutes in the country recognized by the government. And there are certain foreign affiliated degree awarding institutes here, and vocational and employment opportunities straight away as well. But then the important factor, the area that we wanted to capitalize was there are certain students in Sri Lanka who wanted to have the international university experience. So what they normally do is they tend to leave to the other countries. A major number of students out of that market are moving away to other countries, say UK, Australia, Canada, and USA are major destinations of Sri Lankan higher education for the higher education destinations for these students. So what we did was we wanted to get these students to study their degree programs within Sri Lanka in a unique model. So as we move to the next slide, I need to show you what we did was, as a self-finance project, we built our own university with international level university experience. We went to the number 1, 2, 3 universities in the world before building this university, and we understood their systems. We learned how they built these universities, how to give the international student university experience. So based on them, as you can see in the pictures, we built our own university in Sri Lanka with a self-finance model. So we took a bank loan and we developed this massive university just in the suburb of Colombo, just around 10 to 20 minutes from the Colombo city, so that students can live 3 to 4 years inside the university, so they get the university experience. The term university start with the term meaning going into the Latin, where it is a universitas where the scholars and masters are meeting each other for a certain period. So that experience we wanted to give. It's not an online place. It's not a small school-like building. It's a big university experience. So the student get the 360-degree university experience. As we move to the next slide. So this has a many benefits. First is for the students, of course, they get access to international academic exposure within Sri Lanka. So what we did was we got partnership with certain leading international universities like University of Plymouth or University of Victoria, Australia, and now we have Southern Cross University, Australia as partners. So what we did was we built partnership with them, and so the entire degree program, these are not pathway programs, so the entire degree programs is offered within Sri Lanka. And importantly, the students after the first year, the second and the third year, the international academics, they are flying into Sri Lanka as the flying faculty, so that a certain number of modules are delivered by them. So the students get the international exposure, not only through the physical infrastructure, but through the experience with these international academics as well, as you can see in the pictures. So in an affordable price, compared to the international course fees, at the same time, the visa processing, all the hindrances which are there. So they did not want to, they do not want to face those things. Those are, and at the same time, the parents, they can keep the students, their kids, their children in their closer proximity within their culture, and then they can experience international level university within Sri Lanka. And for partner universities also, it gives benefits, because one is their brand is expanding in country like Sri Lanka, and the academics also come into Sri Lanka for not only for this lecturing thing, but also they are doing research related activities, knowledge sharing within in Sri Lanka, and our academics also are going to those countries, and they are also getting this academic exposure. And also it's a financial model. Also it's a revenue sharing model. So the international partners also getting this revenue sharing also. So, and the students, since they don't need to go through these visa processes, which are getting tougher these days, so they can get the international experience here, and they can get the international university degree within Sri Lanka. And of course, they have the foreign university pathways for master's program. Many students, after doing the first degree here, then they go into the other countries for, say, master's or the postgraduate studies, for the not only for partner universities, but for the other universities as well. For NSBM Moscow, it's a big advantage. We are like a higher education ecosystem where we stand as an international university within the country. So at the same time, for the country also, for Sri Lanka, this unique model is providing globally competitive graduates and a qualified workshop. At the same time, it will retain the foreign exchange. So it's a good thing for this Sri Lanka as a country as well. So the many stakeholders are supporting us due to this project, due to these benefits. So just to look at certain key factors that we are doing, how we are doing this entire thing, keeping, especially, can you move to the next slide, please? So one important thing is we are a degree awarding institute approved by the Ministry of Higher Education in Sri Lanka. So we need to be compliant with the quality assurance system in Sri Lanka. So at the same time, the international degrees when we are offering, so there also we are aligning with all the academic standards of international universities. So their academic quality assurance bodies are visiting Sri Lanka, so that we are ensuring the same quality assurance systems are prevailing even though the degrees offered in our country. And our degrees also has a very good, have also a unique model, which is called 2+2, where first 2 years only the degree is conducted in full-time model. The final 2 years, the timetables are set in a part-time way, so the students can work or get an internship. And after the 2 to 3 years, if it's a UK degree, of course, it's a 3-year program. If it's a local one, Sri Lankan one, it's a 4-year. So the students are getting industry exposure as well, so that they are getting industry-oriented at the graduation, they have experience as well. And we also make sure that we are having a highly qualified academic staff, both in the country. We recruit the best of the academics. At the same time, we also get the international academic support also, as we get the flying faculty there. Our staff is getting exposure to the training from their end as well. So as we move to the next slide, I need to show you how in some statistics which might be very interesting. So initially the investment was just 10.2 billion rupees in Sri Lankan rupees, that is, for the entire university we built. It opened in 2016, so it's been 10 years now. We are celebrating our decade anniversary this year. So up to now, we have graduated 23,000 graduates, so which are both NSBM, that is local degree holders, as well as international degree holders, nearly in 50% ratio. And we are currently having 4 international university partnerships. And as you can see, we have the student clubs, student associations, giving different student experience, 360 experience. And we also have 200 plus corporate partnership to support our 2+2 model. And currently we have 13,000 students studying inside the university. It was initially spanning like, say, 26 acres of land. And because of the success of this financial model, we were able to purchase certain other land. So now we are having phase 2 and phase 3. As you can see in the picture, a building is shaping up for the science faculty separately. So altogether another 70 acres land are with NSBM now, so that we can we are keep on expanding. So as we move to the next slide, just to give you an idea about it's more or less how we keep our financial model running. We are a self-finance model. We don't have any private stakeholder. We whatever the investments, whatever the financials that we are bearing, we need to get it done through the students' tuition fee. So we make sure that student tuition fee is set aligning with the financial sustainability of the project, so that it will cover operational cost as well as our loan repayment, and also a certain bit will go to the future development. Whatever the excess income, if we have, that we can do only for the future development of the project. It's not a profit sharing or a profit taking one. Then the affordability, we also make sure that the pricing of these degrees make affordable to the parents. So we get like middle and the higher middle income students to the NSBM Green University. But at the same time, we are also open with one of the government on scholarship programs, so students can come free of charge, where the bank is supporting for the financing of that part, and the students need to pay after the degree program. So we have cohort of students coming in that path also, so to ensure the affordability to the parents. And we also make sure the academic sustainability, the price points are kept in a manner where we need to keep the optimal student staff ratio and the resource management, as well as supporting the current infrastructure. So as we move on, we need to share certain things that helped us. We are very sensitive about the macro and micro environment of higher education. We are keeping close ties with the international partners, as well as we are keep on developing our global engagement, so that we are up to date because we started with the giving the international students university experience, but we wanted to make sure that we are keeping it at a high performing level, so that we are developing with the trends of international universities and the higher education trends. One important factor is we've heavily invested in technology. We have a very good university management information system which is built inside the university. So our operation staff for these 13,000 odd students are really less. It's around 120 to 130 operation staff, so that we get most of the work done through this university management information system. We also make sure the continuous development of the project. As I told you, the excess funds that we are getting, we invest for the future development. The science faculty building is now shaping up. It will be opening with our 10th year anniversary this year. And we've also, as our phase 3, now going to develop a hospital project. We've done all the designing parts, so that a research hospital will be coming up as our phase 3. All these are self-financed and self-funded projects. So to wrap up, I think I can show you certain awards that we won due to this project. Our Vice Chancellor, the founder, was named as the most visionary leader because of the step he'd taken, because that's a very important step, because not only it gave a solution to the higher education in Sri Lanka, but it's a self-finance model. It doesn't depend on the government taxpayers' money. So it is not a burden to the Sri Lankan economy, which is, of course, in the developing stage. At the same time, we gave the international students university experience within Sri Lanka, so that the parents can keep their children inside Sri Lanka. That is an important factor, because that is also helping to the country's development by retaining foreign currency. Also, we are in the process of recruiting international students in the region to the university. We currently have around 100 to 120 students coming from around the country, like from say Maldives and Philippines, and certain students from African continent as well. But then we are trying to expand the marketing there also, so that they don't need to go to UK to attend or our partner universities if they're having trouble in getting international, say, visa and all these processing fees. So, and of course the processors, they of course can study in Sri Lanka and get that degree, and then maybe later move on to the international universities for their postgraduate studies. So therefore we were awarded with the Gold Award for the best service sector in the country, and some awards I have put just as a testimony for the project done within a period of 10 years. So I hope that gives you an idea about NSBM Green University, a project that not only given a solution to the Sri Lankan higher education, it changed the landscape of Sri Lanka, because there were certain international degree providers in the country at the time that we started. But we changed the landscape by providing the real university experience. It's not just a building, not an online training, not a pathway program. We gave the same environment inside the country. I think that is an important factor. So that's why it is a successful project in a span of 10 years. And we are looking forward for the next decade to the other areas such as research and getting certain other affiliations, international affiliations as well. So thank you very much for bearing with me when sharing this entire presentation.
Well, thank you very much. Again, another inspiring story, in fact, quite an amazing story there, and congratulations on your success and your 10-year anniversary. So self-financing university, I think a great example. So we will now move on to our final contribution. Dr. John Machai is unable to join us, but we're very fortunate to have Zephaniah Maduhu, who is the CEO of the organization of which Dr. Machai is president, and that is the Association of African Higher Education Financing Agencies, which is very, very pertinent to what we're looking at. So if I can hand over to you, Zephaniah, please. Thank you very much.
Thank you, and I appreciate for the opportunity for us to present about IFA. We can start on the slide so that we can go through the slide. So IFA is Higher Education Financing Apex for education institution in Africa, an apex body which manages the higher education funds in African countries. The presentation will cover 4 areas, which would be regional financing landscape, IFA membership website, try to understand who our members are and what they do. Students financing models, as we have members coming from the different countries with different experience and how they manage the loan schemes, and innovation and the policy, and also policy priorities. Next slide. So regarding the regional trend on higher education financing in Africa, it's around 9.4%, while the global average is around 38%. It's a bit the low enrollment in Africa due to the various reasons, including poverty and also ability for the most of the parents to sponsor their children to participate in higher education financing. Most African countries, they're spending less than 1% of their general GDP in the tertiary education. Also affects the number of the students to be involved in higher education. And at the budget share, also most of the government allocated around 21% of the education budget to the higher education financing. The priority in most of the African countries in health sector, infrastructure, and other issues, but at least in the higher education, it's a bit lower. But in the recently, at least the enrollment for the lower and upper secondary school has been emerging in most of the African countries, and also they're starting to offer a free education for the lower and the lower and upper secondary. So we're expecting in the near future, the enrollment of higher education will increase. Next slide. Regarding our members, IFA has 14 members in African countries, as listed: Kenya, Tanzania, Rwanda, Uganda, Ghana, Namibia, Botswana, South Africa, Mozambique, Malawi, Lesotho, Sierra Leone, Eswatini, and Zambia. We are doing some engagements to cover some of the countries of the Northern Africa, including Morocco and Egypt, and also to cover some countries on the western part of Africa. At the southern part of Africa, we almost all our countries are members, except Angola and Zimbabwe. We are doing some engagements for those two countries to join association. Common challenges of our members are including high demand versus limited funding. As you know, the population is increasing on the yearly basis, but the government is struggling getting some funds to cover for the higher education financing. Apart from that, there is a low loan recovery rates because at the end of the completion of their study, the students have to repay back the loan. So due to the problem like unemployment, it becomes difficult for the government to recover the loans from the loan beneficiaries. And also we have a problem of the poor tracking system or weak tracking system for the loan beneficiary, especially for those who are working on the private sector and non-formal sector. It's easy to recover from the beneficiaries working at the government because we can recover through the banks or also through the government can assist give you the data. But for those ones who are doing on the informal sector and the other business, it's difficult for them to recover because some of them they're not using banks and also they don't have a monthly income for doing the recovery. Another challenge we are facing graduate unemployment. As you know now in most of the African countries, there's some economic crisis which the government fails to employ all the loan beneficiaries. Next slide. So IFA is formed by different countries and we have the different loan schemes and financing model. The first one is scholarship and grants. This based on the merit-based, based on the performance of the students. So the government pick those students who are performing better to give them grants for them to study in Africa and also in the foreign countries. And also we have another ones which are need-based bursaries. It depends which category is supposed to be funded. Some are being funded tuition fees only. Some are being funded books allowance, and some are being funded accommodation allowance. And also for some courses, for instance, for STEM courses, some government they're providing sponsorship on the full coverage, all expenses, tuition fees, book allowance, and meals and accommodation. It depends on the government policy, but in the recent years, most of the countries, the government provides full scholarships for science and technology courses. And also we have some countries which are doing loan schemes, which whereby they are providing loans to the students, and this loan needs to be repaid after completion of the education. This the beneficiary getting employment. Most of these loans are the lower rates compared to the bank rates, as the government regards the loans as a service, not as a business. And also they usually use the means testing frameworks to understand which people are supposed to be given loan and which category. Means test is like a questionnaire which helps the government understand the life standard of the person, basing on the income, the socioeconomic activities, to understand at which level of the support should be given to these students. And also some students are provided tuition and upkeep support. Another model, so that's an example of the models which are operating in African countries. So for the countries in Kenya, they usually give there are different portfolios, different types of loans, and that the interest which are a bit slow compared to the commercial bank. In Tanzania, in Ghana, on the deduction, they usually do through the social security funds, and they're doing good now, the recovery rate compared in Tanzania, compared to other countries. Tanzania now, they are expanded to national recovery with the means testing framework, and also they're improving the recovery of the loans as they're getting the support from the government. Now they're doing the data integration in between the loan board, revenue authority, and other immigration and other government entities to be able to identify the loan beneficiary to be able to recover. But in South Africa, for it to get more students to access the higher education, now they're providing bursaries instead of loan. Now they're converting from the loan to bursary, so to be able to cover a good number of students. Next slide. On the recovery percentage, Kenya is performing better at 65%. Ghana is performing a little good at 43%, and Namibia at 16%. The challenge of Namibia is also the population. The country has less than 2 million people, and also tracing the recovery, the loan beneficiaries, especially for the previous years, whereby they're doing the process manually by filling the forms. It becomes difficult to get to understand the location and what the loan beneficiary are doing. But now they're using technology. Now they're using banks to recover the loans which are provided for the past few years. One of the root cause, the reasons for the low recovery, as I mentioned earlier, including unemployment, also migration to diaspora, because some of the refugees moved from our country to other countries to work, maybe in Africa, South Africa, to become difficult for us to track them. Another challenge we are facing is a weak enforcement and borrower database. As you know, we need to have clean database and clean information for the loan beneficiary. So once a person changes the address or moving from one country to another, it becomes so difficult for us to trace those people. And also, we have a high subsidized loan structures to the extent it's difficult for us to recover. Emerging recovery forms for our institutions to perform, including payroll deductions and tax authority integration, whereby now most of the member states they deduct, especially for the government employee and the people in the formal sector, on the monthly basis. When the person receiving the salary, then they deduct from the salary. So the employer has the duty to list the loan beneficiaries to the higher education financing institution, and then they can be able to recover. And also including the digital payments, whereby we have various platforms for the payments. One can pay through the bank, one can pay through the mobile payment. So it is a person to pay the loan even if he's not employed, even if he's also in the informal sector, and also through online payment. Also, most of the institutions are working with the credit bureau partnership, whereby we're identifying loan beneficiaries so that we can be able to track them. So upon having a loan, we register the loan at a credit bureau of institution so that you can be able to track and identify also. Also, there have been an engagement with the diaspora, whereby we send our people to go and talk to the loan beneficiary and requesting them to pay back the loan. As long as now we have the mechanism of recovering the loan through internet banking and other option for paying back the loan. Next slide. So some of the new innovations across Africa on the loan recovery, as I said previously, we don't want to depend only on the government support. Our members come to the different option of where to get loans. For instance, in Kenya now, they're proposing to have education bonds and expanding the digital payment integration, whereby private sector can produce and issue the bonds so that we can get the money from bonds and sponsoring the students. Regarding on the recovery, Ghana, now we are working on the pay reduction from the salaries for those people who are employed in the government, and active engagement of the diaspora on their own recovery. And also for South Africa, now they're moving from issuing loans only, also to recover, to do the bursaries, especially for the people who are coming to the poor background who could not afford a higher education. In Rwanda, they have a new technology or new engagement, which include income-linked repayment discussions. So they usually make the payment basing on someone's income, not just only to have a flat rate for everyone, so that to be able to get a big number of the people to be able to pay the loans in time. For Mauritius and Mozambique, there is a subsidized tertiary education, whereby the government is sponsoring some students for different courses. Also, although the fund is not enough, they've been thinking of also issuing loan, also having a partnership with the international organization and other partners for supporting higher education in these two countries. Next slide. So on the way forward on higher education in Africa, we try to request our members to increase investment on higher education, including having other sources of income, including bonds, including talking to the corporates, including engaging the high international institutions. For instance, in Zambia, we requested some companies like mining companies to sponsor some students for the specific course regarding mining. So we find in the region where that company operates, it can take some few students to sponsor. And also UNESCO supporting some refugees to access higher education. And also we're doing the same in Tanzania, trying to ask the corporates as a part of the CSR to support higher education financing. In Ghana, they introduced a levy on the petroleum and gas products. I think it's 1% from every liter, so that at least they can have enough funds to support education. Apart from that, now they're working with the social security, social security funds to having different types of the projects, and that profit from those projects can be able to use to fund higher education. So the diversifying of the higher education sources, the sources of income, it helps these members to have enough fund supporting higher education. On the other hand, we have the different methods of the recovery. We are doing the active engagement. We are using the banks. We're using a mobile payment. We're using the internet to make sure people are paying back the loan. And also, we are doing the flexible repayment, depending on someone's income. So you can accommodate people. You can give them a grace period from some few years and few months for them to get back the loans. And also we do the campaigns on the media requesting for loan beneficiaries to come up front so that we can have a discussion on how we're going to pay back the loan. Next slide. On the way forward now, we believe that to have a sustainable higher education financing in Africa, we should at least invest and higher education, and in order to have that big number of the people to participate on the higher education. It's not only the role of the government, we're including partners, we're including investors, we're including corporate support education financing. Also, we are building systems which makes recovering of the loan to be easy, and also we are trying to have innovation of how to diversify the sources of income, for sources of the funds for this loan higher education financing agencies, to be able to support more students. This includes now we are working with the insurance company so that we can be able to ensure this loan. And also now we are planning to move from even not having this higher education loans board, but to have like a fund whereby people can just save through the education financing agents for the future of their kids. Also, we are collaborating with other institutions, we're collaborating with our partners, and also other higher education institution in overseas, try to understand the higher education, also to have a new mechanism of sponsoring and supporting higher education financing in Africa. Thank you so much for listening.
Well, thank you very much indeed, Zephaniah. That was really fascinating and some great advice there. Invest, recover, innovate, collaborate. So lots of and lots of very interesting detail. Unfortunately, we are pretty well out of time now. We only have 3 minutes, so I think we're going to have to save the Q&A. And what I would ask is if you do have questions, and we do have one or two in the Q&A, we will answer those subsequently when we write out to all participants on this webinar. We will be including a recording of the session, so you will then be able to go back over it and check through. And if you do have questions in addition to those that we have already received, please do send them through, and we'll do our best to answer. Just some closing reflections, really, on what's come out of today. I think the key points that we've covered do show us that when we talk about diversification, we're not talking about moving away from public funding or from government funding. We're not saying that we want to be necessarily totally independent of that, although it's clearly possible to do it, because we've had an example of that already today, which was, I think, one of the case studies that's going to be extremely interesting. But what you do need really is funding to support the general activity, and particularly not just funding, but also the right regulatory and innovation frameworks. And you do need, I think, funding that through partnership can help bring forward other funding. So if government funding is linked to encourage industry to come into partnerships, if there are ways of encouraging philanthropy, and I know that there are really good examples of that where governments have either match funded or made it easy through the tax system and through tax credits for philanthropists to donate, that also can be very helpful. So we're looking here at a kind of ecosystem of funding in terms of diversification. Equity must remain central in all of this. And, you know, to come back to the partnerships point, partnerships do drive resilience. Industry, government, and community partnerships are becoming really central to institutional sustainability. So we would let anybody on this call who has a case study they would like to submit, please do that. We'd be very grateful and happy to receive it and to include it in our final report. We will be publishing in the coming weeks, and we'll let you all know. In the meantime, a massive thank you again to our speakers and to all of you for participating, and we'll see you on the next ACU webinar. Thank you all very much, everybody. Bye-bye.
Thank you. Bye.